Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday. No daily market commentary yesterday as we had our live trade room at tradersarmy.com. If you want to know more about our live trade rooms, go to tradersarmy.com. Sign up for a membership. As a premium member, using the promo code TRADER60, you get 60% off your first month. Okay, let's go ahead and dive in. S&P this morning, we're up 21 points. And looking at these levels, we can see that we had on our 4-hour chart, which is our big picture, and that's our main trend direction chart, we did put in a lower swing low, right? When we got below this area here, we put in a lower swing low. And that was, a decent little run. And then yesterday we rallied back up pretty strong, although sold off then later in the day. So, a little bit of what I would call sideways price action without a whole lot of definitive trend direction at the moment, which is when it's a little bit more difficult to find really good trades and really good opportunities. And so we had some intraday levels yesterday that worked out for a really nice early day run. But then later in the day, we came back down and retested those levels and then actually got below the low of the day in the overnight. Now, we've been rallying ever since we got some strength in the European market opens. So right in here might be an area that's worth considering on a retest. This 2777 by 2769 area, potentially a decent little area for a retest if price comes into that zone. Now, the thing to consider, though, is that we're in a sideways price action. So really any of these levels are going to be difficult on reversals. We do have this little wick over wick area up here as well. So look for both of these levels today, and I think we could get a reversal in either one. Remember that if we base in front of the level, that becomes what we call the kiss of death, right? Kiss of death is basing before a level. Yesterday we talked about, yesterday we had this little 15-minute level of supply that price came close to, and then we based in front of it, which made it a bit weaker. Now, we did wind up popping just above there before then selling off in the overnights. But with the basing here, it actually reduced your reward to risk. And so now we're looking at where's my next area of opportunity. I got a very clean wick over wick level here in the NASDAQ right up here. And I think this is a very clean area. And then this is that same level that we just put in the S&P for a potential reversal in the NASDAQ. So looking at that, I think we could see a decent move. Looking at the 4-hour on the NASDAQ, once again, we do have that lower swing low and that little lower swing high, but then there's been no follow through. And the fact that we rallied in the overnight told me there was no follow through on this, and that there's kind of still this push and pull between the buyers and the sellers, right? Now, remember, we're in earnings season, and we've seen a fair amount of stocks move up on earnings. As much as they may have missed projections or didn't go where they originally wanted to, we've seen a fair amount of stocks that have gapped up on earnings and moved higher on an earnings report. And some of those stocks that are gapping higher and moving us up are NASDAQ-related stocks. So I think we could continue to see that trend going forward into next week. And that's why I think that, though we did get a lower swing low in the 4-hour, there's been no real follow-through on that to give us that downward trend direction. So let's just keep an eye on that. Remember, with any futures market on a Friday, if you plan on holding it over the weekend, make sure that you understand the risk of holding a futures contract over the weekend and you hedge yourself effectively. All right, next, crude oil. So looking at crude, we are rallying up. Now, this is our crude June contract. One of the things about the June contract is most brokers are not allowing us to open new June contracts. And, June has gone from $6.50 a barrel back up to 17, which is almost a 200% increase, and then some. And so now, but we're not looking at the June contract, because if you're going to want to trade this thing, and I know that at least Thinkorswim said no opening of July contracts either. So I'm going to go out and look at the September contract. Now, one of the things that I hear people talk about is, hey, this September contract doesn't have enough liquidity. Do I want to trade it? So one of the ways, the simplest way that I check for quality liquidity is I go to a 5-minute chart. And why do I go to a 5-minute chart? Because I look for major gapping moves. So if I do, let's say the CLZ 20, which is the December contract, I don't really see all that much gapping even on a 5-minute chart. If I go further, CL M21. I go out to June of 21. Now I see a lot of gapping on the chart. So this tells me that the CLM is not liquid enough for me to be interested in trading. However, the CLU 20, which is the one we're looking at, to me, that has enough liquidity. I mean, you've got a small amount of gaps, but let's look at what time those gaps occur. They're occurring, in the Globex session when the markets are least likely to be traded, right? So you're looking at those 5 p.m., 7 p.m. gaps that we don't really pay as much attention to. If I go to like the CLZ, which is the December, I'm actually seeing less gaps than I am in the September. So if you're dying to trade oil, there are ways to trade it. Now, I don't really use the 5-minute chart ever. I primarily use the 15-minute chart. But the other thing that I care about is the spread in these positions. And, you're going to see a little bit wider of a spread. So in this case, I'm looking at the spread here being about 2 or 3 ticks wide on average, 2 to 3 ticks on average. So not a humongous spread when it comes to the number of ticks. When I do the December contract, I've actually got a slightly tighter spread. So the December might actually be the better contract to trade when looking at this. I'm going to continue to analyze the September just because it's a little bit closer in the contract month, and it's the one that I've spent the time on. But you'll notice that the chart shapes are basically the same, right? So the prices are different, but the chart shapes are basically the same. And if you're comfortable trading one, you can probably trade the other. And right now, what I'm looking at on my 4-hour chart is we have not yet put in a higher swing high, but I think we may have put in a higher swing low. Well, how would I have an uptrend confirmed? It would be if we get through this swing high. If I put in another higher high, then by definition, I'd have a higher high and a higher low. So ultimately, what I'm looking for is, are we going to get basing just in front of this 27.97 area? Now, if we do, I think that we could have the ability for price to run a bit higher. And I know nobody's talking bullishly about oil, but I think you could get a run higher up through here with price making it into this 30.26 region very easily, right? Because we had this very strong move away, and this is kind of a gap, if you will. It plays like a gap, and I think that could be a magnet for price. So keep an eye on that one later today if you're interested in it. As always, I would highly recommend if you get into a position today that you are out of it by the end of the day. I do not believe we should be holding oil over the weekend unless you're going to use options. And you could use options on futures on this kind of a position. Next, looking at gold. So here's our GC level. Now, we did have a GC area of supply. Price based in front of the level, which already is kiss of death numero uno. And then we came into the level, and then 1, 2, 3, 4, 5, 6 candles later, the market said, hey, you should probably get out. Then it traded to the top of the level and then bounced sideways again. It gave you plenty of time to realize that this trade was not the right fit. However, oftentimes those areas of supply become new areas of demand, and we've rallied up from that level. So when I look at this, I want to keep an eye on a potential breakout above this area here. Because we had these double wicks in here, we're getting a little bit of basing. I think if price gets through there, our 4-hour trend continues to go higher, and we get into a new high in gold. We're not quite yet near the all-time high, but we're getting there. All right, next, looking at bonds. In our ZN, which is our 10-year note, we haven't really spoke too much about it because there hasn't been much to say. We've really just kind of gone sideways here for a while. Our 4-hour trend direction, like I've said, is non-definitive. So with a non-definitive, directionally strong trend, I'm just probably going to want to stay out unless I get to a very good level of demand or supply. And right now, the closest would be this area right down in here at this 138, 245 region. Next would be the Aussie. The Aussie as well, very similar picture. We are in between our areas of both supply and demand. Not a whole lot to lean on. We do have this little area of supply that we bounced off of with the tweezer top. This little supply area right here, which our tweezer top hit and moved away from. So this was a nice little trade for anybody that was able to catch that one. I know a couple of you did. I got a couple of text messages about people receiving that level. But the next area up has to be above this level now. So look for basing here for a potential breakout above there. But other than that, that's the only way I think there's really to trade this Aussie. You know, we could get a little bit of a pullback long area, but none of these supply levels make sense to me above, and none of the demand levels down below are really overly enticing for me to want to jump in on at the moment. Next, the euro. So looking at the euro, we did have this euro potential breakdown level, which we came in yesterday. We touched it, and then it was unable to really do a whole lot. And we touched it and popped down through, and then rallied back up. So if you took that one, I think that one sets up for a little bit of a stop out because we did get a very strong move up right away. And then it came down the way we thought it was going to go, which is unfortunate, before then rallying back up. So in reality, the market has done nothing. Well, why has the market done nothing? Well, because what's my 4-hour trend? My 4-hour trend was very sideways. We did start to come down from there. And that's really was the breakdown from there. And then this little poke up brought it back down again. So I think short is still the way to go. I just need to make sure that I have a pretty good reversal opportunity when I get in there. And on the hourly chart, we've actually had strong rally up in the overnight. We have come into this little level here where we could see some supply on the hourly, but I don't know that I would want to jump in on it just right now. I think that we are already getting a bit of a reversal, and this just isn't a phenomenal level. It's okay, but I think okay is the best thing I can say for it, and we haven't quite reached it yet, and we're basing a bit in front of it. What do I mean by basing in front of it? Well, we wicked up, we wicked down, we've come back up, we've come back down. So this tells me that we're basing in front of this level, and if I have to think about it that hard, I probably don't want to take the trade. All right, moving on to the Canadian dollar. So in our Canadian dollar, we did have a little bit of an area here, which bounced down into our confirmation long, got a little touch off of that level. We talked about this as a potential way to get in, but the better trade was the breakout, and we did get a little bit of basing before the breakout yesterday for a nice little breakout move in the Canadian dollar. And so that actually worked out pretty strong. And then price pulled back in the overnight, and we've rallied back up. So I think if you took that breakout move and you went to bed and you had a nice profitable trade on, then you woke up and you're a little bit ahead of where you probably went to bed last night as we pulled back down. You came close to your entry and probably were sweating it pretty good, but it's now continuing to move. I think at this point, your stop originally should have been down here. At the very least, you should take your stop and move it underneath this last pivot, probably actually underneath this wick over wick. Now, if you're not in it and you want to look to see what can I look at, well, let's go to my 4-hour. My 4 hours telling me, okay, I do have a higher swing low and a higher swing high. I can be a buyer, which is why these confirmation shorts above us are just that. They're confirmation levels. Now, when you trim down to the 15-minute chart, you do have a pretty decent little reversal point right here where I think you have an opportunity to get long. So I'm going to wrap my lines around that zone and post that as a potential level. And then my last two markets, the Great British Pound and the Japanese Yen. When I look at the pound, let me zoom in on this. We had that kind of very sideways price action in our 4-hour trend. And so we did come into our 15-minute level. We basically hit it and went nowhere. If you kind of take a look at this, remember our 6-candle rule. 1, 2, 3, 4, 5, 6. Prices had gone nowhere off of that 15-minute level. And then off the hourly chart, we hit it 1, 2, 3, 4, 5. After price number 6, you had the opportunity to move your stop to break even. Now, this one did wind up moving down for a pretty nice move. Actually, the 6 candles, never mind, sorry. 6 candle roll on the hourly chart, you didn't get your full 6 up here. You just got a little touch above. Now, didn't go above where your stop loss would be, which would be up in here, but did get a little, maybe a 4-to-1 move out of that zone. That level now has to be dead to me, as it can't be touched again, and so now I would need basing in front of this level for a potential long if we think prices can trade up through here. On our 4-hour time period, we see though that we have lower swing lows, lower swing highs, so there is that little bit of exposure and risk. You certainly could see price reverse and come back down as well, and so look for a base, some sort of basing and a breakdown below this pivot for price to drop. Last is the Japanese yen. So our yen is ridiculously range bound, as we've just been bouncing between here all week. And we did have a big move yesterday, but there's no reason to enter the short yesterday on this big move because price didn't give us any basing below there. And that's the 3rd time that we've come below that line with no basing. And I'm still leaving the line there because I still think it's valid if I get the basing. I think that area is I've got a line, but really it's this whole area that is the point where we're kind of basing around, right? It's that whole region where we just keep hitting and basing through. And so I feel like that's still a valid area. I think on our 4-hour chart, we are very much sideways. I mean, this is about as sideways pinch as you can get. And we're just seeing, what we're really seeing more than anything is volatility getting back to normal. Our swings are back to our candle sizes that are a bit more manageable. If you see these candle sizes versus what it had been in the past, our swings are just getting a bit more manageable. We're seeing volatility come down in pretty much all of our markets. If I take a look at the VIX, which is our U.S. equity market volatility, we've seen volatility settle off pretty good, and I think we can continue to see that. So as we head into the weekend, just remember the rules. Don't force a trade. If it's not there, don't take it. And if you have any questions, as always, please send us an email, support@tradersarmy.com. I will talk to you soon. See you.